This scalping trading strategy uses the best TradingView indicators for taking buys and sell signals, and in some areas even uses a 70% win rate using an oscillator that you've probably never seen before. Let's check it out. Okay, so to start this strategy, we're going to open up Bitcoin on the 5-minute time frame on TradingView.com, and we're going to add 3 indicators to our TradingView. The first one we're going to add that I've mentioned in a previous video is UT bot alerts. Type it in and it's this one here by Quant Nomad. The settings on the bot alert, on the style I've removed the bar colours, and on the inputs I've changed the key value to 3 and the ATR period to 10, and I've ticked signals from Heikin-Ashi candles. We now have buy and sell signal labels printed here, but we're not going to be entering trades exactly on these signals, and I'm going to show you why in a minute. The second indicator we'll be adding, type in ATR stop, and it's this ATR stop loss indicator by Edgar. For the settings I've left the style the same, and the ATR length is 12 and the multiplier is 1.5. We'll be using this for our stop loss level just to keep the trades nice and safe. The final and magic indicator that we're going to be adding to this strategy to improve the win rate massively is the Andean Oscillator by Alex Grover right here. Type in Andean and it'll come up. Add that to your chart and it'll look something like this down here. So this is everything we need for the strategy, and I'm now going to show you how the oscillator works and how we'll be taking buys and sells entries on Bitcoin. So if I pull up the oscillator here so you can see it a bit better. Let me hide the orange line for a minute just to make this super simple for you. We want to only focus on the line that is at the top. Right here you can see the green line crosses below the red, and when the red line is above, it means that we're in a downtrend, and when the green line is above, like here, it means we're in an uptrend. That's all you need to focus on for the oscillator, and then for taking entries, if we add this orange line back into it, green line crosses below and the red above, so we are now in a downtrend because the red is above, and when this red crosses this orange signal line, which is right here, red is now above the both of the two of them, and that means we are now safe to take sells. Same goes for an uptrend. You can see very closely here the green line crosses above the red line and also crosses above the orange signal line right there. We'll be taking entries on the 5-minute time frame, but before we do that we want to go over to the 15-minute chart, and this is where we'll be deciding whether we're taking buys or sells. Using the oscillator here, we can even hide the orange line just for this point, and all we're going to be drawing is rectangles. We'll be drawing them for sells when the red line is above the green. I've coloured it red. You can see down here the green line crosses above the red, so it's now in an uptrend, so a little box will be needed from here to here. Finally the red line crosses above the green again, so from this point onwards you can see the red line is above, so this is still a downtrend right here, so we'll only be looking for sells there. Once you've marked out this area, you then know whether it's safe to take buys or sells. From this point you can then go back onto the 5-minute time frame, double click on the oscillator and add the signal back, and now you're ready to trade. This first red box that we drew, it has a buy signal which you can clearly see is not valid at all, as price rejects straight away, and then we have this first sell signal right here, so let's zoom in on this. When the sell signal paints, we aren't necessarily entering the trade as soon as this closes on this candle, waiting for our entry on when the red line of the oscillator crosses above the orange signal line. In this case the oscillator crossed above on this second candle here, on this little white one, so we'd wait for the close of this white one and we'd technically be entering on this candle right here. We'd enter our short position on the start of this candle. We will then be putting our stop loss level at the ATR line that is above the signal candle, which is right here. Even though we're entering on this candle, we will not be putting the line at this ATR. We'll be putting it at the top of the sell candle, which is about there. We'll then target 2 times the risk. If we go a bit further over, there is another buy here, but this trade again is invalid because the background is red. This shows that we're still in a downtrend on a higher time frame. And then we get a sell signal paint here. Now if we check the oscillator and line it up, we can see that the red line has crossed above the green, so we're now in a downtrend. So we wait a couple candles after the sell. On the close of this yellow candle here, it now confirms the trade. So we would enter this sell on the close of this candle, put the stop loss above the sell candle's ATR, which is about there, and then again target 2 times the risk. And then finally we had a buy paint here and then a sell paint here. Let's check this one out. The sell paints, and then a couple candles later the signal line goes below the sell line, which is on this candle here, so we can enter our trade. stop loss above the sell candle, and target 2 times the risk. The higher time frame trend changed to green here, but there was no buy signals. The higher time frame trend changed to green here, but there was no buy signals during this time. There was one just before it. May have instigated the 15-minute time frame change. Back to sell trades, and you can see straight away we have a sell, and it lines up. In this case, we can enter on the sells candle, ATR above the sell candle, and again target 2 times the risk. Keep going, we can see we have a buy, but it's not valid, and then we have another sell right here. This signal to enter takes a couple candles, and on this yellow candle right here, it's finally crossed over, so we can enter. Stop loss above the sell, 2 risk to reward, and that one has also hit as well. Now we do have this sell signal paint, and it looks like a bad trade, but when you take a closer look and zoom in on the oscillator, you can see that the red line did not actually cross above the orange signal line, so we would not have entered this trade. When the signal sell painted, we would have been waiting, and it would have looked like it was going to cross, but it never actually did. So we've avoided this loss right here. Okay, so I'm now going to backtest this strategy on Bitcoin. I'll show the results on Trader Edge. Please hit that subscribe button if you enjoy the video, and like if you want to see the results. Okay, so these are the results. We had a win percent over 100 trades with 66 wins and 34 losses. And on a 10,000 MyForex Funds account, we made a profit of $16,255. We had a profit factor of 3.88 and had 11 consecutive wins in a row and 6 losses in a row. This definitely would have been eligible to pass a MyForex Funds account. We were in no major drawdown on the account. If you're risking 0.5 to 1% per trade, you've only been 3 to 6% drawdown, that keeps you well within your 12% overall drawdown rule. But thank you very much for watching. Please leave a comment if there's any strategies you want me to check out. And if you enjoyed this one, check this video out right here, and thank you very much for watching.